Keshab Panda, who's MD and CEO L&T Technology Services, joins in to talk more about their earnings. Keshab, good to have you on the show. Good morning. What was the organic growth in a seasonally soft quarter besides contribution from graphene consolidation?
It is something around, I didn't calculate that. I can tell you 4.8% dollar terms we have grown. And contribution of total number, we did 186 million in this quarter. Graphene comes only 2 million.
Okay, inorganic growth opportunities being pursued. Reports indicate that your bigger twin brother, L&T Infotech, is interested in Mindtree. What's keeping your M&A team busy? If you could share some details or throw more light on it.
One thing I can tell you, we had one more strong quarter this quarter, and we have given a guidance of 21%. First I started with 16, I revised last quarter 21. Now I'm revising the guidance to 24%. That means FY 18 to 19, we will grow by 24%. I think this is the industry, the best result, I would think. So this is one part. Second part, when you look at M&A, we're an engineering company. We don't do IT, engineering and technology company. Engineering and technology, M&A, you have to be very careful, very selective. The companies where we have technology we can acquire, which is going to help me into the growth, not the revenue number growth, but growth in terms of my strategy, what you intend to do in long run. For example, we have 99 patents right now. All this, a number of platforms we have. Is that going to help me to increase my innovation engine, which I have created, having a M&A? We'll do that, but not for the number.
Okay, Keshab, given the increasing cost of doing business reflecting in higher subcontracting expenses for the industry and increasing local hiring overseas, tighter US visa norms leading to demand fulfillment challenges for some of your peers, would your EBITDA margins in forthcoming quarters through FY 20 also come down while the rupee tailwind has also retreated?
See, I think if you see this quarter, we have grown 310 BPS year on year, right? We have grown that. And, there are many levers available. The days have gone where the number of employees to your revenue per employee, that you have to come out of that. Is there any way innovation I do which is going to add value? For example, this quarter, we sold, our IP, intellectual property, what we have, we own, we sold for $500,000, right? If you sell $500,000, that adds up to your EBITDA. So can we do more and more those areas? Can I do a project where, take the responsibility of new technology where others cannot do it? Can I take that? Then I make margin. So I think, and one thing is clear though, the change in the rule of visa rule and hiring local, we have been doing that. We did 50 engineers to hire, but trust me, if you do it right, get the engineers from the engineering school and train them and use them in a customer where you don't need Indian engineers to fly to US or Europe. It is much more cost effective than taking an Indian engineer. So we are more careful doing that, managing the cost there. And again, on-site offshore also we manage that well. So so far I don't think any issue there. We have multiple levers always there, and we look at that. What is working today could be different from next year, for next quarter, and so on.
Okay. Also wanted to understand, that capital return policy we'll be seeing from your end in terms of a structured buyback as followed by your bigger peers. What kind of a payout would you like to return to shareholders?
Listen, I think we have a policy of giving dividend 35 to 40% of profit, which we'll continue to do that. Buyback is too early. We are a company only 3 years, 2.5, 3 years old. And we need to establish ourselves. We need to make sure that consistency in our customer and investors and employees, I think that we need to look at it before buyback. There are companies who are referring to, they've been there 20 years, 25 years in the market. You can understand that. So buyback question doesn't arise. We are not going to look at that. We are doing well, continue to do well, and focus on customer satisfaction, focus on investor satisfaction, employee satisfaction. That's all I think we're focusing on right now.
Okay, how much does digital account for overall business? What growth run rate on annual basis do you see being maintained here?
In quarter, 34% of our business is digital. See, I don't call digital is loosely used, I think. So when I talk digital, I'd say digital and high-tech. Okay, high-tech work we do for artificial intelligence, the work we do in virtual reality, and the work we do in digital industry 4.0, smart product, altogether 34% of our quarterly revenue this quarter is digital and high-tech area. And the growth last year, 18 to 19, the digital revenue has grown 109%. So I think that's a good number to remember.
Thanks very much, Keshab, for joining us and giving us those details on your earnings. We wish you the very best for the future.